the volume peak indicator is not an indicator that I use often. I probably, yeah, hell, I use it when the market seems quite frothy. When you think you're in the crazy bull market season, I tend to look at this as just one data point in a sea of data points from which you base your opinion on. Okay, so what do I mean by this? So if you go to CoinGecko, just go to the main one. Now typically it's basically comparing the volume, the daily volume, based on the market cap. Now if you go to Bitcoin, I would say it's less, you know, the bigger a coin like Bitcoin, I think it's less accurate. Although I know some could, I could easily argue that actually Bitcoin is more accurate because it's bigger, has more data, etc. It has the most volume. But if you basically go onto market cap, click on max, and then all you do is let's look at the last peak. So the last peak was over here, right? So I'm just going to get my calculator out here, and all you do is you simply work this out as a percentage. Now, a rough rule of thumb is that with if I just what I tend to say for Bitcoin is that if you get sort of like between, I don't know, 3 to 7%, that's an indicator that you're sort of a frothy market, frothy / potential all-time high. And for alts, I would say it's more like 5 to 10%. Okay, so that's sort of the benchmark. Now, all you do, you go to market cap, press max, and then, you know, let's look at this one here. So on my calculator, I'm going to type in 105,426,313,891 divided by the market cap of 1278797895528. That gives us 8.2%. Times that by 100, 8.24%. So yeah, that's a pretty frothy market there, and I agree with that. However, if you go back to, it's not a very reliable indicator, which is why I rarely use it. So if I can zoom in here and look at the 2017 high. So this is 5116192,713 divided by 315,720,182. That gives you 1.55%. Now, I think the caveat here is that in 2017, crypto, although, you know, it did well, I think we peaked at like an $800 billion market cap, as in total crypto market cap. It was still a new thing. You know, the world still shat on Bitcoin. I mean, people still do it, but you know, back then it was still a fad. It was still instant monopoly money. Now it's been given legitimacy based on BlackRock and whatnot. So I think the previous cycles, it's harder to do it. For example, if you go back to, can I expand this? Here we go. If you go back to this one, actually I haven't done it on this one, so it'll be interesting to see. Where's that peak? It's up there. Yeah, look at the volume, 0. Volume, you know, you didn't get much accurate data back in the day. So that's that. If you then go to, I don't know, let's take a random coin that did, you know, that got pretty frothy in the last cycle. Here we go, Solana. It came out of nowhere. Well, it came out of the VC's arse, and the VCs dumped it on everyone, basically. Oh, the VCs dumped on everyone, is what I meant to say. 5466 divided by 77,427,308,372. That's 5%. Okay. So I guess as a benchmark, 5% is a pretty good indicator, but let's look at it on the run up there. Okay, and I hope this proves my point, because sometimes on the run up of the bull market you can get that, you know, oh, we're at 5%, and you still got like another 50% of the market, you know, of rallying to do. So I'm hoping this shows us something similar. So if we take that peak, 12,182,432,665 divided by 55,264,334,912. Come on, come on. Okay, 2.2%. It didn't prove my point. Oh no, so that's 20. Have I done that wrong? I've got 22% here. Let's try again. 12,182,432,665 divided by 55,264,334,912. Shit, that was 22%. So, actually that's helped my point quite a lot there, because here you could have done that calculation, gone, holy shit, 22%, yeah, I'm selling everything here. And yeah, as it's gone down, you know, a week after or whatever, you would have been feeling pretty happy. Only for, you know, FOMO to really kick in hard as it then goes from here all the way up to here. Now, is that necessarily a bad thing? Not really, because if you manage to exit right at that peak here, that's no different from running all the way up to the top, letting it break some base support, and then sort of getting out on a Kobo slightly higher there. So I guess it could look after you. But the thing is, if you use that 5 to 10% rule, like at what point are you actually getting out? So what about if it, on this little move here, on that little sort of clump there, don't worry, this trading pub is not going to be full of me doing calculations like this. I just wanted to make a point. 2687938994 divided by 22227352877 times, yeah, here we go. Prime example, that came to 12.09%. So you could be at the beginning of a bull market here. You go, oh, we've just, you know, let's zoom in here. Where is it? It's there. At the beginning of the bull market, you do this calculation. It goes, oh shit, 12%. I'm going to sell everything. Only for the bull market to go, you know, triple from there. So it's one of those metrics where some people wax lyrical about it, and I'm always like, sort of. It's sort of like looking out the window and going, yeah, sky looks a bit grey-ish, but you can't tell whether it's going to rain over your house or rain 5 miles away. It's one of those things. Now, where does that leave Bitcoin right now? So if we look at Bitcoin, if we go to market cap and max, so this was interesting because I did it this morning. If you just take this rough high, there we go. Actually, let's zoom in. Let's take that recent high right up there. So 51906601044 divided by 1436631290572. That gives us 3.6%. Meh. Okay, it's still very early. So yeah. It's one way of seeing if the market's getting overheated or not. It's worth doing every now and then, especially if you have like if you were to take something like, I don't know what, if you were to take Casper, you know, on the last time it did a proper surge, as in from here to here, if you were to calculate that right at the peak there, you're probably going to get an elevated sort of figure. So what I would do is use an average of this volume metric. So, you know, you may think it's pretty high, etc. But then if you did it down here, that figure is going to be a lot lower. So in my opinion, I would do an average figure over a period of time. And if the figure is still pretty high over a period of time, then yeah. So I'm just curious here. I'll do 2 more and then I'll move on because I know this is probably quite boring for some of you. So I'll go from this high to that low. So that high is 124,327,121 divided by 3,110,966,037. So it came to 3.99% at the high. At the low is probably going to be like here. 21798,926 divided by 2204,043,640, and then it goes down to 0.98%. So yeah, that sort of makes sense. But yeah, just I think this is more of a peripheral knowledge Okay, this is not something that you're going to use. If anything, I'm hoping I sort of dissuade you from using this as your primary thing. If we're looking at market peaks, again, I can't believe I'm talking about market peaks already. We haven't even begun the proper bull market yet. But, you know, there's a whole bunch of on-chain metrics that we will be looking at, you know, next year. And even when I look at the on-chain metrics, I'm going to put a lot less weight on on-chain metrics this cycle than I did last cycle. So I guess you know, in the last cycle high around 2021, I put too much weight on on-chain metrics. Pretty much every on-chain metric we were looking at, from everything on Glassnode and Check on Chain, etc., there were about probably 10 to 12 indicators all pointing that the high would be 100k Bitcoin for that end of the cycle. Literally everything from MVRV to the Rodel ratio to like everything. Everything was shouting at 100k Bitcoin, and unfortunately we didn't get there. Now, whether that was manipulation and, you know, stuff happened before Bitcoin was able to get up there, you know, FTX going, who knows, it doesn't really matter. But the main learning point is that on-chain is great, but I would attribute less weight to it than anything. Just treat it as some data points, but yeah, don't hang your hat on it. And unfortunately, you're going to have to hang, you know, to really nail that frothy all-time high sort of, right, we need to bang out sort of area. We're going to have to rely on a lot of different metrics, all sort of collating it into one sort of point. So when the fundamental fundamental analysis starts lining up that, you know, we're near market high, and then that starts corroborating other indicators, then we're starting to do that.